Welcome to Eureka Street Crypto. This is my anti-professional crypto channel. I'm just a barely sane dude who fell down the cryptocurrency rabbit hole. This channel is my fumbling attempt to communicate myself outside my own head about my journey in the crypto space. It is basically my brain dump. None of this is actual financial advice. Good morning, everybody. I'm Eureka John, just making sure the mic was on. And you are tuned in to Eureka Street Crypto, broadcasting live from Leander, Texas. It is 5:30 on the dot in the morning on December 20th, 2021. And yep, this is my crypto morning show, aka brain dump, video blog, whatever you want to call it. This is me spouting out some stuff that I've learned in crypto every single day. I do not skip a day. This is how I roll. And this is my time in the morning to get the crypto out of me before I try to infect everybody else with it all around me all day. So I can focus on being a dad, a husband, a friend, a coworker, whatever else I need to be, instead of this annoying guy sitting here poking you about crypto stuff, So, yep, that's me. I'm not sponsored by anybody. I'm not shilling anything, and none of this is financial advice. It's barely even educational advice. And this is definitely not technical analysis or fundamental analysis or anything like that. No, an analysis. All right. This is just for fun. All right, so let's move on here. Let's look at the market, and we got some Bitcoin at 46,074 and 10 cents. So it's a little lower than it's been. So it's gotten down to 46. Should we be worried? I don't know. I'm not worried. Whatever. Ethereum, $3,813.83. So I mean, Bitcoin and Ethereum, it's weird to say that they are a bargain, because this time last year, things were a little different. Binance at 515.23. Tether's a stable coin. See, I think they need to take the stable coins out of the top, or just out of these rankings in general. Stable coins and wrap coins, they gotta go. But they're in here. Solana 172.75, USDC, another stable coin. XRP 85 cents. Cardano $1.22. Terra 77.15. Polkadot 23.99. Avalanche 103.67. And technically, if the stable coins weren't in there, we would have Doge and Sheebs right there at 9 and 10. So so let's see here. Doge is at 16 cents, and Sheebs is some ungodly number, well below 0.00002954. But if Sheebs ever becomes $1, those investors will be billionaires. All right, so that's what they keep telling themselves. So let's see here. Polygon is at 209. Anything that is really up, Avalanche, I guess, in the past 7 days, and Terra are the two. Terra is up 24%, and Avalanche is 17.5%. So cool, man. And then OKB, that's an exchange coin. Hedera Hashgraph up 24.4%. Let's see, it's been kind of just hovering around between 25 and 30 cents anyway for a long time. Let's see, Decentraland and Sandbox, two Metaverse tokens, down 10 and 12%. And then Theta, now also categorized as a Metaverse token, is down 10%. Tezos and their whole alternate NFT blockchain stuff and everything going on, they have a really cool market over there for some artists that don't really feel like or can afford to play on the Ethereum NFT market and all those NFT flippers. There's some really good artists over on the Tezos blockchain, so you might want to check that out. I think it's the Heck Noon market over there. If you get the Kukai wallet, it has links directly out of that wallet to go to those markets. There's a couple really good markets over there. Let's see here. Yeah, I mean, everything's pretty much just like bleeding red for the most part. You get a couple oddballs on there like Harmony Chain, Spelled. Oh, so yeah, Spell token, man. I have stuff in Spell, and that's up 22% right now. 16%. It was up to like 18% yesterday, and I was looking at my gains on that. So that's over there at abracadabra.money is where you can find that DApp, and there's some good money to be made over there. And then let's see, Yearn Finance is up 61.9%, so it's looking pretty if you yeah. All right, so let's move on to some topics. There's one helpful tool that I love, and I've been using this tool. I don't use it all the time lately, but it's a good way to look at just the traffic, the blockchain traffic, the buying and selling. You can see the blockchain live on Transaction Street. And let me fix this visualization. Sorry for the people who are only on audio while I adjust this stuff. Yes, I am on Spotify and all the other major podcasting platforms except for Apple because I don't know. There's just some whole weird authentication process that I can't seem to get done. I don't know. For some reason, it's like rejecting my address. I don't know. It's just typical Apple BS stuff. And I don't have the time to sit around and figure out how Apple does this or that for the privilege of being on Apple. So that being said, okay, so Transaction Street, txstreet.com, but go see me on Spotify, right? Or Google Play. Okay, so you see, you have the home, you have the ETH gas prices. See, they've completely restructured their page. It used to just be you log in and you go straight to the visualizer, which is like a little bus stop, right? Okay, so let's take a look at this visualizer. So you see down here, real quick, below, the live Ethereum transactions happening right now and the live Bitcoin transactions happening right now. Scrolling across your screen, you know, I wonder if Tank in the Matrix was actually looking at blockchain transactions going and happening right then, and looking for oddities, spikes or whale movements or anything like that. You know, that's probably what he was looking at. Yeah, so he wasn't looking for glitches in the Matrix, or maybe this is the Matrix. Maybe he was looking at the blockchain activity in a metaverse, and that's really all that was. He was sitting outside of the metaverse, and he had his screens up, and he was looking for glitches or weird activity in the metaverse, which would be in the form of really high transactions or just something like that, some kind of whale movements that would alter and cause ripple effects within the metaverse. He was I think Tank is the best financial analyst out there. The technical analysis, he's the best technical analysis guy out there. That guy could read a Head and Shoulders off of a plateau, or whatever, off of a table. All right, so live Ethereum the broadcasted transactions per second. Ethereum has 14.79 right now, and Bitcoin has 3.41. The median fee right now for Ethereum is $17.35, which is actually not bad. Bitcoin is 39 cents, and and it shows the Ethereum blocks, the block size, the Bitcoin blocks. I don't know what these two characters are down there. I think they're just for fun. So let's see here. Let's go into the visualizer, and I believe that they've added CryptoPunks to this. And I'm trying to figure out how is there really that much volume? Or are they counting like fractionalized volume of CryptoPunks? This is why I wanted to check out this visualizer. Okay, so first time around here? No. Well, this is my first time since the revamp of the website, so let them give me the tour. Transaction Street is a live blockchain transaction and meme pool visualizer. Each person represents a single transaction happening in real time. Okay, cool. Each house transaction represents a type of transaction, and click the houses for more info. Okay, so here we go. And it shows the stats on the left and on the right, and each bus represents a future block. The first bus leaves when a block is found. So it shows a little bus stop and a 2-lane freeway. One of the lane is Ethereum on the left, and the other lane is Bitcoin on the right. And it shows all the little passengers lining up. It looks like a subway stop in New York early in the morning whenever you're trying to get from Brooklyn to Manhattan. I used to do that every single day, and that sucked. Basically somebody's hanging on to the rafter, and you have your hot coffee, and you're being squashed in there like a sewer rat, and your nose is in some dude's armpit or something. So Each bus represents a future block. The first bus, well, I'm kind of tall, so my nose wasn't really. It's usually somebody's nose, and it's probably some poor lady nose was in my armpit. So I tried to make sure that my armpits smelled halfway decent. So each bus represents a future block, and the first bus leaves when the block is found. Oh, look, Ethereum kind of let up a little bit, and the traffic is down to 30 Gwei here, which is pretty cool. So you can watch in real time. So click the coin name button at the top to change streets, or change subway stops, or whatever, however you want to visualize it. So tutorial complete. Thank you. Close. Okay. All right. All right. So here's these stats. I'm going to close these stat panels real quick, just so that, and you can see Bitcoin traffic is, pretty easy going. And then they have the Segway trailer on the back, the Segwit trailer on the back. It shows the median transfer fee is $3.24 on Ethereum, and Bitcoin is 39 cents. So it shows everybody coming from all the different houses. Here's the Tether house. This one's a donation house in which you can donate to Transaction Street. There's OpenSeas. There's Uniswap. There's USDC. There's Maker. There's coming from MetaMask transactions. And then here's the Shiba Inu. Axie Infinity, 0x Protocol, Compound. I think this is Aave, the little ghost. Here's CryptoKitties. Somebody bought a CryptoKitty. Yeah, so there's right when I said that. There's Curve Finance, Rareable, Sushi. Man, they've added so many. I don't know what this N is. There's Synthetics. There's 1inch. I don't know what the OWL is. There's a Balancer and Bancor, Chainlink. I don't know what this one is. And there's Kyber Network. And there's just a bunch of randos down here from everything else. And then they show the low fee line right here. Those are the people that sit here and try to get transactions through. Those are the peasants that try to get the transactions through at the very lowest costs. And they're below that. Or they maybe custom transact to try to sneak one in that's really low. But this low fee line now is getting pushed further and further down. So if you're in that, you're stuck with the masses. I mean, look at this low fee line. It looks like waiting in line for the monster truck extravaganza on Sunday before the gates open. So and then of course Bitcoin's over here on this other side. It's very uncrowded. So let's see what the options are. There's Ethereum, there's Bitcoin, there's Bitcoin Cash, there's Monero, and there's Litecoin. I, for some reason, thought that there was CryptoPunks on here. I saw somewhere that said that. So a Moonhead, NFTs, stats, transactions, blocks, and then, okay, so hold on. Just for shites and giggles, let me see what the traffic on Bitcoin Cash is like. I'm kind of curious as to why Bitcoin Cash is on there, honestly. So the traffic on Bitcoin Cash versus Bitcoin. Okay, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 people, 12. Okay, so there's some Bitcoin Cash traffic. I don't want to dog on Bitcoin Cash too hard. Smooth Love Potion over here. I don't know what this is. Let me click on this one. Cash Fusion. I don't even know what that is. It gives a little description. So it's designed to allow users to consolidate their coins after using Cash Shuffle. Cash Fusion does this using a blind verification scheme in which an arbitrary number of inputs and outputs of non-standard amounts is verified by a random player, further obfuscating the transaction history of the coins. Cash Fusion provides anonymous, trustless coordination with usually zero knowledge of linkages revealed to other players of the server. Interesting. Okay, so I learn something new every day. I'll have to see what Cash Fusion is all about. Doesn't seem to be a lot of transaction activity on it. And then let's see what this one is here. AnyHedge. The first DeFi application to be built on Bitcoin. So Bitcoin Cash has a DeFi application. Wow. Okay, so I guess all these are like Bitcoin Cash related type of dApps. Cash Shuffle. Fully decentralized Bitcoin Cash privacy protocol that matches you with other network participants to collectively shuffle your Bitcoin Cash. Okay, and it obscures, so it's like kind of ring signature style things. It shuffles them up and everything like that. And then let's see what this is. Eat Bitcoin Cash. Okay, it's like a charity. We simply provide food to people that prepare and deliver meals to you. Man, I'm gonna have to just maybe take a look at Bitcoin Cash and see what's up. I like to make fun of them, you know, but I don't really have any real basis for making fun of them, so I feel kind of bad about that. Mimo is an open source protocol, social media protocol built on Bitcoin Cash that describes how actions like posting are encoded. I feel bad now. I'll go take a look at Bitcoin Cash at some point here, you know, yeah. And then they have one for Monero. So, yeah. Yeah, don't make fun of stuff that you don't know totally about. You know, or if you do, I mean, I don't obviously do this like with a serious heart or anything, like, you know, wishing for demise of any particular projects, unless they're like specifically connected to the World Economic Forum and stuff like that. Then that, yeah. Okay, and then over here's Litecoin. All right, so so let's take a quick look at this. Let me get back over to Ethereum. I want to look at this NFT portion of the website. Moonheads NFTs. Let's see what's up with this. So set your Moonhead. It's kind of like a little depot where you can buy different Moonheads. Man, so Man in Black 20 minted at 0.35 Ethereum. Moonboy 10 minted at 0.42 Ethereum. These things are kind of expensive. Alien 15 minted at 0.4. Okay, so all right. Well, cool. All right. So that's that. I just kind of wanted to take a look at it. I always have fun with transaction. txstreet.com if you want to go take a look for yourself. It's a great way to visualize all this stuff. All right. So that being said, I was looking at Bitcoin and I was wondering, like, why is it so low right now? I mean, what could be the problem? And then I started thinking about, like, this is fourth quarter. And fourth quarter is about to come to an end, and then it's like the year end and stuff like that, unless it's like a fiscal year and it's not on the actual year date. But I think a lot of companies actually line up their fiscal year end with actual year end. The company that I work for, their fiscal year end is in June 1st. So that's kind of weird. But I would think that a lot of companies that invest in Bitcoin, and again, I don't know jack squat about running companies or taxes or businesses or anything like that, so don't take anything I say for like gold. All right, all apologies aside, I would think that companies that put Bitcoin on their books don't necessarily, I mean, because Bitcoin's gone up regardless of whether it's $46,000 or whatever, they don't necessarily want to report that many gains in their company for tax purposes. It's right around Q4, so that might present an issue. And like I said, I don't know, but I just kind of have a hunch that this might be some of the reasoning behind a lot of this. It's just my pure speculation. But, like, you know, if you report too many gains and you got to pay more taxes, and companies don't like to pay the government all these taxes, because companies. So I don't know, maybe that has something to do with it. So it kind of led me to go down a minor rabbit hole. I went to the Footnotes Analyst website. I have no idea what this is, but it was published in February 15th of 2021. Financial Reporting Challenge for Investors. So it says, whether you view Bitcoin as a modern day tulip mania bubble that will inevitably burst or an unstoppable development in finance, one thing is certain: companies are increasingly purchasing this asset. But how do Bitcoin and other cryptocurrencies affect reported financial position and performance metrics? There are no accounting rules dedicated to cryptocurrencies. Right. Yeah. So under the US GAAP and usually under IFRS, intangible asset accounting is applied. And I guess I don't really know what those agency acronyms are, but they seem important. We use the reporting by MicroStrategy to illustrate why this does not provide the right information for investors and explain how you should include cryptocurrency assets in your analysis. So, obviously, a lot of people know this, but some people might not either. If you're new to the crypto space, Tesla and Elon Musk have attracted the headlines for the recent purchase of $1.5 billion of Bitcoin, but this is not the first mainstream corporate to invest heavily in cryptocurrency. U.S. business intelligence company MicroStrategy owns digital assets. So besides Tesla and Elon Musk, MicroStrategy owns digital assets reported at $1.1 billion in its balance sheet as of December 31st, 2020. It's more now. In its recent earnings release announced that the market value of its holdings at 27th of July 2021 was 2.3 billion. Its commitment to the asset is such that it says Bitcoin is now their primary treasury reserve and that it intends to invest additional excess cash flows in Bitcoin. So as part of the MicroStrategy Q4 2020 earnings release extracts, 2020 was a transformational year for MicroStrategy. In our enterprise intelligence business, we continue to embrace the virtual wave. We are successfully shifting our prospects and customers to our enterprise cloud platform and also launched our new Sales as a Service offering, Hyper.now. We also dramatically improved the efficiency and profitability of our business, said Michael Saylor. So regarding our Bitcoin strategy, our pioneering decision to make Bitcoin our primary treasury reserve asset has made MicroStrategy a thought leader in the cryptocurrency market and generated great interest in MicroStrategy as a corporation. Going forward, we plan to hold our Bitcoin and invest additional excess cash flows in Bitcoin. Additionally, we will explore various approaches to acquire additional Bitcoin as part of our overall corporate strategy. So the Bitcoin acquisitions, as part of MicroStrategy's previously announced treasury management and capital allocation strategies, MicroStrategy purchased a total of approximately 32,220 Bitcoin at an is it Bitcoin or Bitcoins? Is it deer or deers, right? At an aggregate purchase price of 700 million in the fourth quarter of 2020 for an average purchase price of approximately 21,726 per Bitcoin. That's a pretty good average. When you're thinking in terms of now at it being 46,000, they've made a lot of money off of that. So further, in the first quarter of 2021 to date, MicroStrategy has purchased approximately 314 Bitcoin at an aggregate purchase price of $10 million for an average purchase price for such additional Bitcoins of approximately 31,808. So even in January, in the first quarter of 2021, they were still buying at an average of 31,000. So in future periods, MicroStrategy may purchase additional Bitcoin and increase its overall holdings of Bitcoin, or sell its Bitcoin and decrease its overall holdings of Bitcoin. So whatever you may think about the merits of companies investing in Bitcoin and other cryptocurrencies, it's clear that there's an increasing tendency for these assets to be held beyond just specialist funds or cryptocurrency miners. But exactly what type of asset is a cryptocurrency, and how should changes in their value be reflected in profit and loss, and when? Furthermore, how should you analyze companies which hold Bitcoin and other cryptocurrencies? Basically, they're going to say here, accounting was not designed for cryptocurrencies. They do not fit in the current accounting framework very well, and there's no no accounting standard dedicated to this asset under either the IFRS or the US GAAP, the GAAP, and the existing standards were clearly not written with crypto assets in mind. The most obvious answer is that a cryptocurrency is simply another currency and should be accounted for in the same way as any foreign currency cash. This would mean reporting cryptocurrency at its equivalent current value in the company's reporting currency. So it said in highlights here, in accounting, a cryptocurrency is not cash. So it would also mean including cryptocurrency holdings as part of cash in the balance sheet, in cash and cash equivalents in the cash flow statement. This would not result in any entries in the cash flow statement for purchases or sales of cryptocurrency, in the same way that moving cash from one bank account to another is not a cash flow. So changes in the value of cryptocurrency when expressed in the reporting currency would appear as currency gains or losses in profit and loss. So I'm thinking in quarters, and I'm thinking how people have to report this, and yeah, it would appear as currency gains in profit and loss statement. The problem is that cryptocurrencies are not regarded as a currency for accounting purposes. This is because they're not considered legal tender and are not issued or backed by a government or state, and are not directly related to setting prices for goods and services. Now that El Salvador has adopted Bitcoin, this may start changing things, you know. So nor does a cryptocurrency meet the definition of a cash equivalent. So even though they might be readily convertible into cash, so to be regarded as a cash equivalent, they must also have insignificant risk of changes in value, not something that cryptocurrencies are known for. Cryptocurrencies are known for volatility, right? That's the number one thing. Well, it's pretty volatile. You're just gambling. So if a cryptocurrency is not cash, then maybe it's some other type of financial asset. However, cryptocurrencies do not give contractual rights to any flows, and the only way to realize value is to sell the asset to another party, right? Yeah, true. There is no interest, dividends, right to repayment, or any other cash flow that characterizes a financial asset. This means the accounting standards that specify how financial assets are measured, the amortized cost of fair value, and how gains and losses are reported do not apply. So the accounting standards on how that specify how financial assets are measured and how losses and gains are reporting don't apply here. It's unfortunate, as they think that at least under IFRS, financial instrument accounting would produce a good answer. All right. So the answer is that cryptocurrencies meet the accounting definition of indefinite life intangible fixed assets. That was a mouthful. This applies in all cases under US GAAP and in most cases under IFRS. Some holdings may qualify as inventory, which they explain below. Let's see if there's anything that I can really delineate here. They just go through a bunch of key differences between IFRS and US GAAP. And they lay them out here in this table. So for instance, in IFRS, the reversal of impairment, yes, if price recovers, gain is reported in profit and loss. And then that's for IFRS. And then GAAP says no, the impairments are not reversed. So if the price drops, then it's just reported as a loss, which can be good, for taxes for businesses. Then IFRS says, for upward reevaluation, that's permitted. Reevaluation gain reported in OCI, and then USGAP that's not permitted. And then in IFRS, the revaluation surplus on sale that remains in OCI, no recycling to profit and loss. And then the GAAP says not applicable. So there's a bunch of differences between two very powerful acronym agencies that are accounting for accounting agencies. And this goes to show, I'm not really going to sit here and cherry pick a bunch of differences and try to explain all this stuff because I have absolutely zero clue what's going on. But what I can see is that there's a lot of inconsistency and nobody really knows what to do. So they say, we do not think that a cost-based approach to accounting for cryptocurrency holdings provides investors with relevant information. The historical purchase price is likely to be completely irrelevant within days given the price volatility of these assets. And the gain on sale useless in measuring performance. In addition, the historical cost approach enables the company to time sales to realize profit when it suits them. So even measuring the realized profit is difficult because cryptocurrencies are a fungible asset. So yeah, MicroStrategy takes a very conservative approach and writes down their holding of Bitcoin to the lowest price it has traded at any time since the asset was purchased. This seems to us to produce unhelpful results. Okay. And then inventory accounting may apply. So under IFRS, it's possible that cryptocurrency could be classified as inventory if they have held for resale. However, this only applies if they are held for sale or consumption in the ordinary course of business. It is difficult to see how this applies to cryptocurrency held for investment or treasury purposes. Yeah, cryptocurrency is not exactly like selling, hose and hose products, like some kind of commodity that you got to resell as a distributor. You buy it from a manufacturer and you sell it to distributors, and then the distributors sell it to the end users. It's not like that. Some argue that cryptocurrency is closer to a commodity such as gold. After all, Bitcoin has been described as the new gold of course, the process by which new Bitcoin is created is called mining. However, analogizing to commodities is a stretch, considering that all recognized commodities have a physical form, which is not the case for cryptocurrency held in an electronic wallet. Under IFRS, commodities held by a broker trader may be reported at a fair loss, less cost to sell, with changes in value included in profit and loss. Yeah. And even then, Bitcoin is not stored in a wallet. Bitcoin is stored on a blockchain. You just own the keys to the access to that blockchain, to that specific Bitcoin on the blockchain. So that's what a lot of people don't understand about that. That they're like, I have the Bitcoin in my wallet. No, you don't. You have the keys to that place on the blockchain where that Bitcoin is. Anyway. One interesting aspect about Galaxy Holdings approach, and theirs is that it's as inventory, right? Where a digital asset is not actively traded, the assets are based upon quoted prices of similar assets based on unobservable inputs. Okay. So Galaxy Holdings, let's see here, has applied this approach about the inventory. No, they apply the gold approach, I believe. No, hold on. So Galaxy Assets, there's limited guidance on the recognition and measurement of digital assets. The partnership has assessed that it acts in a capacity as a commodity broker as defined in IAS 2, inventories. Okay, so they classify it as inventory. In characterizing certain of its holdings as inventory, or more specifically digital assets, if assets held by commodity broker trades are principally acquired for the purpose of selling in the near future and generating a profit from fluctuation in price broker traders margin, such assets are accounted for as inventory, and changes in fair value, less cost to sell, are recognized in profit or loss. Okay. So an interesting aspect about Galaxy Holdings approach is that where digital asset is not actively traded, the assets are based upon quoted prices of similar assets or based on unobservable inputs. So they think that it's much more difficult to use a comparable asset or to find fundamental valuation inputs to valuable cryptocurrencies that are not actively traded than it is for, say, level 3 financial assets. So we wonder how, for example, Dogecoin can have any relevance in valuing, say, Polkadot, or what unobservable inputs might be, or how can Dogecoin help in valuating Bitcoin? You know, it can't. Yeah. Dogecoin's a meme coin. So their view, okay, they think that cryptocurrencies should be recorded at their current fair value in the balance sheet, with changes in value reported in profit and loss. This should apply irrespective of why the asset is held or the intention regarding their trading or timing of realization. We do not think cryptocurrencies should be reported as cash, given the limited ability to use them in exchange transactions, although conceivably that could change, right? I mean, you know, Wayfair now takes Bitcoin, and so does a lot of other large online product marketplaces. So they should be a separate category of investments with appropriate disclosure of the nature of the holdings, the business rationale for the investment, and information about their price volatility, transferability, and liquidity. In cases where there is limited liquidity and there is significant uncertainty about the value of the asset, whether it can be realized, then, in our view, the asset should be reported at zero in the balance sheet. So they think there's a difference between a level 3 valuation of financial instruments and putting a price on cryptocurrency with limited transferability. So in the case of financial assets, there are fundamental value drivers, flows, and comparable assets to inform any valuation. This is not the case for a cryptocurrency. A fair value through profit and loss approach means that unrealized gains are recognized in profit and loss, which some might regard as not prudent accounting. The price volatility of cryptocurrencies will also make reported profit extremely volatile and driven by potentially random and irrational price movements. Yeah, it's pretty random, isn't it? As you can see here, right now what's going on. So we believe a fair value approach supported by relevant disclosure is the most useful, that investors are perfectly capable of interpreting the value changes correctly. We do not agree that companies should report only realized profits, or that unrealized gains arising from investment assets should be excluded from profit and losses. Now, this whole unrealized gains approach to me doesn't make sense. You know, like, yeah, no, I'm not on board with unrealized gains, period. Yeah. I don't know. Anyway, so my point is I didn't really understand jack squat of what this article was talking about because I don't know much about accounting, but it just kind of just goes to show what a cluster all this stuff is. And then, yeah, I didn't mean to spend the entire episode talking about this stuff, but Bitcoin right now is really low. It's at 46,000. And I'm wondering if a lot of this has to do with quarterly reporting and stuff like that, and reporting these profits and losses. And, you know, because if a company makes way too much profits and even in unrealized gains, as you can see, then there might be an issue. So, you know, they have a commitment to shareholders, you know. So I don't know how this looks on taxes, but I just started reading that article, trying to find an answer to this, and I didn't really find what I was looking for. So yeah, thanks for joining me on this this pointless episode. Yeah, It is what it is. Not every episode's riveting. Yeah. So, especially when you're talking about taxes. All right. And accounting. All right. Well, that being said, I'm going to go about my day. I'm going to forget this episode ever happened. You guys have a good day, and I will talk to you tomorrow. All right. Well, maybe I'll talk about Gnosis safes and Parcel and all that stuff tomorrow. And yeah, some of these DAO tools. All right. Later. Thank you for making it to the end of this program. If you actually like this content, give a thumbs up. And if you want to hear more, just hit the subscribe button. I'm available on YouTube, Odyssey, and BitChute, and on all the major podcasting platforms in audio version. Spotify specifically. If you would like to follow and leave a review, that would help a lot. I am also available on Twitter at EurekaJohn1. That's EUREKA John, JOHN, and the number 1. My DMs are always open. Feel free to shoot me a message. Thanks again.